Welcome back to the Takeout. Thanks for hanging out with us. The price of gold has reached an all-time high, eclipsing $5,000 per ounce, nearly $5,500 actually. Investors are buying up precious metals like gold and silver as a safe harbor against economic volatility overseas and here. I spoke with a subject expert about this, Bloomberg's Jim Wiederhold, about what all this means. So gold and silver keep setting records. Historically, that's been regarded as a flight to safety. Should we still think of it that way?
Yeah, the gold and silver metals, the precious metals within the broader commodities space, they're clearly known to be stores of value. So that was their traditional role many hundreds of years ago, and that still stands true today. So people are looking for a store of value. We're seeing, depreciation in the U.S. dollar. There's some rotation out of U.S. assets more internationally, but also a function of that is more investment in gold. So, people are looking for that store of value, that safe haven, and gold fills those roles.
Does the unpredictability of Trump policy in regards to tariffs create more of a flight to safety?
I would think, with all the news headlines that we're getting, it's clearly something that affects commodities markets in general. So, you see tariffs on certain critical metals and minerals that, almost every country now is really taking a close look at over the last year. So they're looking at internally within their borders on how to get all the resources that they need. And, commodity prices are affected by that. So, last year we saw big moves up and down in the copper price on potential tariff news. And then once the tariff news came out that it, wasn't as bad as expected, we saw a drop in prices. So over the last year, tariffs have been a big part of the reason for commodities prices moving higher more generally.
And Jim, you just said another one of those magic words, copper. What's the copper of it all in terms of commodity pricing and copper's relationship as a kind of stand-in for the broader global economy?
It's typically known as Dr. Copper, so it's very correlated to economic data points around the world, industrial growth. And it's interesting that we're seeing new all-time highs at copper around the same time as new all-time highs in gold. So typically copper rises when we have strong economic growth, but a part of that is now also it's becoming somewhat of a store of value. And so we're seeing these moves higher at the same time that there's worry around the world from investors, and that's why gold has moved higher. So it's kind of one of those unprecedented moments in the commodities markets with both these metals, gold and copper, moving higher at the same time.
I want to pick up on another word you just said, worry, because I've heard you say in other podcasts there is a potential wall of worry out there that could influence commodity prices.
Yeah, we've had a very big run up in equity prices. Some people are concerned about valuations at this point, and commodities are typically used as a diversifier within a portfolio. So, people are looking back at the asset class over the last 2 years and, putting exposure on as a diversifier because commodities tend to be uncorrelated to other major asset classes. So, they fit nicely to help with the diversification that people are looking for right now.
And what do global trends in energy consumption mean for the commodity space?
Well, we're seeing a shift compared to what we've seen historically last few decades. We're going through an energy transition. So, while the past was fueled by fossil fuels, the future is going to be powered by metals. So, we're electrifying all parts of our economy. And the key industrial metals, even the precious metals and battery metals, there's a lot of forecasts that demand is going to be only picking up from here. And, supply could be an issue because it takes a while to have a new mine go into production and sometimes 10 years. So our in-house research team thinks that there's going to be big supply deficits in copper. We've already seen deficits the last few years in some of the other precious metals like platinum, and that could continue. We'll see what happens over the next few years.
And Jim, real quick, stagflation, a concern of yours, 2026?
I would think after the last few years of a deflationary trend, we saw CPI readings move lower. They're still above what the Fed's target is on the core readings, but if we are in a completely different environment than we were in the 2010s, where globalization is reversing, we're seeing more geopolitical tensions pick up, severe weather. It's all a recipe for potentially higher prices, and a lot of that is people's utility bills are increasing pretty dramatically with the introduction of a new energy need for AI as well. So that's a recipe for prices to potentially move higher from here.
Bloomberg's Jim Wiederhold. I appreciate it. Thanks so much.
Thank you. Thanks for having me.